Founders, Brad here. So I am buying 5 new Magic Formula stocks, and I'm going to reveal them with you right now. So every 3 months, I add 5 Magic Formula stocks to my kind of test Magic Formula portfolio in my son's retirement account. He's only 2 years old, so he has a very long runway. But I've heard a lot about the Magic Formula. I've read the book by Joel Greenblatt. And really, the only way for me to get a sense of can this thing perform is by testing it. And the way it recommends in the book is to randomly select these stocks from this Magic Formula Investing stock screener. But I picked up a little nugget from Monish Pabrai in his book, The Dondo Investor, where he said, the Magic Formula is great, but you might consider comparing Magic Formula stocks with something that's in another source as well, like Value Investors Club, something like that, where you're laying filters on top of this list of Magic Formula stocks to even further improve your performance. So that's what I'm testing. I'm starting with a list of about 60 Magic Formula stocks. And I have a number of different filters that I'm running those stocks through to try to get down to just 5 stocks. And I'm going to go through how I got to the 5 that I'm going to show you today. So first we go to Magic Formula Investing. We're going to pull up 50 stocks. It gives you a choice of 30 or 50. We're going to do 50. And we're going to keep it here at this lower minimum market cap of 50 million. So get stocks. Now, what I did was I copied all of these tickers, okay? These are the top performing Magic Formula stocks in the entire universe of companies that this formula looks at. So I copied this list of 50, and then what I did is I ran it again for 250 million, okay? And there were only 8 or 9 that were on here that weren't on the first one. So I brought all those into this Excel spreadsheet. And how many do we end up with here? We end up with 58, okay, 58 stocks to look at. Now, the first filters I'm going to run these through are, does a super investor own them? And does that super investor have more than 1% conviction in the stock? Meaning, does it make up at least 1% of that super investor's portfolio? So you can see here, I wrote how many of these super investors or gurus own the stock. And for the guru that has the most conviction, what percent allocation does that stock have in their portfolio? So you can see I did that column. And the place I'm finding these is Dataroma, okay? So if we try the first one, ABC, we see ownership count 1. There's one investor that's tracked by Dataroma who owns AmerisourceBergen. And that's Lee Ainsley, okay? Now it's only 0.04% of his portfolio. So that's what I put in here. One super investor, 0.04%. So that's the first filter. Now, I also did the second filter on this same page because it's really an or. It only has to satisfy either the guru criteria or it has to have a write-up in Value Investors Club within the last 3 years, okay? And that's this site here, Value Investors Club. I've talked a lot about this one. So, for example, let's do ABC, not AGC, ABC. And it'll drop down everything that's related to that ticker ABC. So we see AmerisourceBergen here. Now I want the most recent write-up. And you can see here that's from October 16th of 2016. So, it's a long write-up. This investor who wrote up this thesis thinks the stock price is going to go up, right? It's going to be a good investment potentially for investors. Whereas this S means it's a short thesis, which means the investor who wrote that thinks the stock is going to go down, all right? A company to bet against, in other words. So all we're going to do is we're going to take this October 2016, and we're going to plop that here, the most recent write-up from Value Investors Club. Now you can see here, this first one, a guru has bought it, but it's less than 1%. It has a write-up in Value Investors Club, but it's more than 3 years ago that it was written up. So neither of these two criteria are satisfied in the way that I'm running this. So this would be a no-go. I'm not including this in the next filters. So that's what I did. I went through and figured out which of these stocks meet at least one of these criteria. Now we're going to jump over to the next list. Okay. Now this list is the 30 companies that satisfied at least one of those criteria. You can see here, either there's at least 1% conviction with the guru, or there's a write-up within the last 3 years. So those are the first two filters. Now I have the industry here just because, in the first round of magic formula buying that I did 6 months ago, there were a couple companies in the entertainment industry. And in my last buy 3 months ago, there were a few entertainment companies that were up near the top of the list, but I didn't want a heavy concentration in one industry. So I excluded those entertainment companies. And, I'm going to do the same thing this time around, and I'll talk more about that in a bit. I just want to go through these columns first. So really the next filter after guru ownership and write-up in Value Investors Club is insider ownership, okay? I want a management team, I want the board of directors to have alignment with me as an equity investor, okay? If management isn't willing to own their own company, why should I be interested in owning that company? As a stock is a partial ownership in a business. So I want to see that management has skin in the game in terms of equity ownership. So that's my next criteria. How are these owner-operator companies? And I really picked up this criteria from Chris Meyer, author of 100 Baggers. Fantastic book. And he's really bullish on this criteria, insider ownership. So I simply sorted by insider ownership. That was the next column. And the place I found insider ownership was Value Line. So Value Line is normally a fairly expensive service, but I found a library in Virginia that's like $30 a year, and it allows me to access Value Line, with that library membership. So I was able to go into Value Line, look up each one of these, see what the insider ownership percentage was, and just list that here. And you can see I sorted from highest to lowest insider ownership. Now the next column, well, there's kind of a chunk of columns that are related to each other here. This one is operating income from the last 12 months. And you can find that at Morningstar, okay? So you type in the ticker, we're doing AMCX because that's the top one on the list here. You click on financials, and then you go down here, operating income, trailing 12 months. That's the number I'm using, which is 660 million or 0.66 billion. So you've got operating income from the last 12 months. Net debt, how do we get that? That is simply on the balance sheet. It's total debt from the most recent quarter, which is 3.11 billion, minus cash and cash equivalents, which is 1.07 billion. So you just subtract the total debt, you subtract cash from the total debt, because you could go ahead and pay off the debt with the cash on the balance sheet if you really wanted to. So the net debt is 2.04. So that's what this is here. Now, the metric I really like to look at between operating income and net debt is the debt to operating income ratio, which really tells us how long would it take to pay off the debt if you just used the operating income, okay? And in this case, it would take just over 3 years to pay off the debt from the operating income. Operating income is an annual number, so it takes 3 of those years, just over 3 years, to pay off the debt. And I like to see this under 3. 3.1, it's okay. It's right there, kind of at that 3 threshold. I'm going to let that slip through. But 6.1, 7.3, too high. The number one reason companies don't make it, they go bankrupt. The number one reason investors lose money on stocks is leverage. Okay, too much debt. So I want to stay away from that. Something close to 3 or less is what I'm looking for with the debt to operating income ratio. Then we have our acquirer's multiple here. Acquirer's multiple is a book by Tobias Carlyle, and it's really enterprise value, basically over operating income from the last 12 months. It's basically how much would it cost to buy a business versus how much are you bringing in each year. And the lower the acquirer's multiple, the cheaper the business is from an operating income perspective. So 5.3 is awesome. Really like that one. And I don't have a hard limit on the acquirer's multiple. It's really just here for me to kind of have more information. But I don't have a particular threshold with the acquirer's multiple. And this last one, this is a new one. I haven't had this in past videos. The reason I put it in, median 10-year return on invested capital, is because the magic formula uses 2 metrics, as you probably know. Earnings yield, which is a measure of how cheap a business is, and return on invested capital, which is a measure of how good a business is. But the return on invested capital metric that the magic formula uses is just based on the last year. Okay, it's numbers from the last year. So, if I'm trying to gauge how good a business is, I really want to see more than a year's worth of data on return on invested capital. So this looks at what was the return on invested capital over the last 10 years and kind of what was the middle year, the median. So, it seems like a good metric to get a sense for, is this a good business over the long term? Is there some kind of sustainable competitive advantage? Or was the last year just kind of an outlier? And so it's, making it look good showing up on this screener. So it's just another data point to gauge whether a business is actually good. And then I included the market cap. I have a slight preference for businesses that are smaller because they tend to be less followed, and there's more opportunity for mispricings typically in smaller companies. But again, I don't have a hard, it must be below a certain market cap. And then I just listed the price today on December 30th. So what were the results? So you've got AMC, right? AMCX. 2 super investors, the highest had a 1.9% conviction. There's a write-up from May 2018. So that checked both of those boxes, which is great. The biggest insider ownership that I saw with this current screen here, pretty impressive, 23.6% owned by the board and the management team. We've got a debt to operating income. Again, I just squeaked out. It's 3.1. I'm going to let it slip through. It's not a hard and fast, must be less than 3 situation. Very nice acquirer's multiple. 15.7 median 10-year return on invested capital. Pretty solid there. So this was a go. AMCX, thumbs up. adding that one. Fox. So the situation with Fox is, I don't want yet another entertainment company in my Magic Formula portfolio. AMCX makes 3 out of the 15 out of the first kind of 3 buys. And I don't really want 4. 3 is enough. That's like 20% of the portfolio right now. So for that reason, we're going to exclude Fox A from this round of buying. RPRX. So this one was kind of interesting. Biotechnology company, very recent write-up in Value Investors Club. No gurus own it. I think it's a foreign company. I didn't look too deeply into it. Obviously, I don't remember if it's a foreign company or not. It took a little bit of finagling to get the insider ownership number for RPRX. I had to look at the S2 in the SEC filings and kind of piece that together. But again, a very strong insider ownership for that one. Operating income, net debt, really, really solid 1.2 ratio, debt to operating income. Acquires multiple 13. It's a little higher than I like to see. I mean, ideally I'm under 10, but again, I don't have a hard and fast rule about that. Now, I couldn't find the median 10-year ROIC because I believe this company has only been around for a couple of years. And I think it may have even IPO'd as RPRX in 2020. But there were some financials that went back a few years earlier than that. So that's my second pick, RPRX. Then we've got Weight Watchers and Tivity Health. They both got excluded because the debt was too high. The net debt was too high compared to operating income. Just not comfortable with that situation. Number 3 on the list is HEAR, an electronics company. I believe they make gaming headphones and things like that. No super investors own that one, but there is a write-up from just over 2 years ago in Value Investors Club. 8.5% insider ownership. Now, I really like to see this above 10, but it just wasn't in the cards for this round of Magic Formula stocks. Operating income. Now, this is where I actually switched units. Some of you guys are going to freak out about this. So this operating income units were in billions. Starting here, they're in millions. Okay. The reason for that is that's how Morningstar provided the data, and I just didn't feel like tinkering around with the decimal places, and it doesn't really matter because really I'm just comparing net debt to operating income and enterprise value. So as long as these are all consistent across the row, it's not a problem. So 7.4 acquires multiple, very strong. There's no debt. This negative 27 million in net debt means there's more cash on the balance sheet than there is debt. Okay, so that's why it's negative, because there is no debt. It's there's more cash, so that's great. That means we have a 0 debt to operating income because there's no debt. So this was interesting. I mean, this company, the volatility of the ROIC over the last 10 years was pretty insane. I don't love that this is negative, the median ROIC over the last 10 years. But, this is a new metric. It's not kind of a firm metric. I want to track it for a little bit and see if there's any correlation with returns. So it's not a deal breaker, but I don't love that this is negative. It's a pretty small company, $345 million market cap. So I don't know, maybe just because it's small. It's having, hasn't really found its stability yet. But we'll keep an eye on that. The next one is WSTG. Okay, very recent write-up from June of this year, June of 2020, in the computer software industry. 7.6% insider ownership. No debt. Again, we've got a negative number here for net debt, which we love to see. 7.6 acquirers multiple. Fantastic. Very strong median 10-year return on invested capital. Very small company. $84 million. That is a very small market cap. And then number five. Number five surprised me. Phil Town is a big fan of this company, Ruger Firearms. Okay, no super investors own it other than Phil, if you consider him a super investor, which I think many of you probably do. A lot of Phil Town fans on my channel. Value Investors Club. There's a write-up from, just under 2 years ago, back in February 2019. Here we are in the recreation industry. Insider ownership, really not where I want to see it at 4.5%. But again, not super strong with the insider ownership in this round. We've got a very nice cash versus debt situation for Ruger. Positive 132-ish million on the balance sheet, cash versus debt. So enterprise value at $1 billion. Acquirers multiple 11.5. Again, I really like to see it under 10, but 11.5 is pretty good. And I've heard Phil talk about Ruger and why he likes the company so much. Just the competitive advantage they have, the quality of product that Ruger puts out. I think you can find that if you just go to Invested podcast episodes and search for Ruger. He does a pretty good job of riffing on Ruger in one of those episodes. And then we've got median 10-year return on invested capital, 33.6. Fantastic, the best on here. Pretty small. It was smaller than I thought it was, $1.1 billion market cap. And there you have it, guys. Those are the 5 picks this round, December 2020. AMCX, RPRX, HEAR, WSTG, and RGR. And here are the buy prices from today. So the way I'm doing this, I'm putting $100 into each of these companies using fractional shares. So, I don't need to buy in 1 share increments. For example, if I was buying AMCX and I didn't have access to fractional shares, I might have to buy 3 shares and spend, what would that be? $106 or something like that. But I can buy just flat out $100 on Robinhood, and that's what I'm doing. So I'll have 2.8 shares of AMCX, and doing that for these guys as well. So that's it. Invest $500, $100 each in these 5 companies, and we'll see how it works out. Now, I just want to show you guys the performance that I've had from the first round back at the end of June and the second round at the end of September, because I know a lot of you guys are interested in that. So here are my June 2020 picks. Unisys, Mastercraft Boat Holdings, Garrett Technology, MSG Networks, and Discovery Communications. Now I put $100 each into those. And as of today, on December 30th, these are the balances that I have on those companies. Let me take a sip here. So, this is 6 months, all right? So you invest $500, standing at $692.22 today. So that's a 38 0.4% return over 6 months. Now, I'm not going to annualize that or do anything crazy like that. To be honest, short-term results like this, I think are virtually meaningless. The magic formula approach, it's really a kind of a multi-year, 5, 10 years, 20 years, even better approach. And stocks like this that are typically smaller, small cap stocks, they're going to fluctuate all over the place. So, you've got the true value of the stock, and then you've got what the market is pricing it at. And it's all over the board. And that's really not the game that I'm playing. So short-term results like this, they don't really mean anything to me. But they're interesting regardless. So 6 months, 38.4%. Now my September 2020 picks, TNET, NATH, CORT, CHRS, and Leg H. You can see $100 in. Here is what those are currently worth in my portfolio. So 500 in, just over 600 balance in my account, 20.1% over 3 months. So, these are great numbers. Again, not super meaningful to me at this point because I'm going to be holding these stocks for 2 years or more, okay? So what they've done in the first 3 or 6 months, I don't know how relevant it is for what they're going to do in 2 or more years. So we'll just have to wait and see on that. But just thought I'd show you guys how the first 2 rounds of magic formula buying, has gone so far. So with that, guys, I will leave it. I'm going to link to this spreadsheet in the description of this video, so do check it out. Feel free to ask any questions at all in the comments. I geek out over this stuff. I mean, this research is just so fun for me. So if you take any issue with any of my filters, you think I should be adding other filters, there's filters I'm, missing out on, let me know in the comments. I'd love to hear from you. And with that, I wish you guys a happy new year, and hopefully 2021 has less surprises perhaps than 2020. It's been quite a ride. All right, guys, I will see you in the next video. Take care.